This expert recently made a significant Tesla prediction. You should pay attention to what he has to say if you invest in Tesla. Fair stock prices and your method of doing this is incredibly comprehensive. Please let people know about that. Yes, let's dissect my perspective on Tesla. As of right present, Tesla's market capitalization is approximately $700 billion. That is the company's value, and it is a significant value. But it makes sense, in my opinion, in a lot of ways. There are two ways I see things. First off, how much is the worth of every automaker on the planet that we can be certain will make it through the switch to electric cars? There are just two that come to mind: Tesla and Toyota, of course. Even as additional companies join the EV industry, Tesla continues to have a sizable market share. But this isn't just about electric vehicles. It's also about Tesla's new ventures, which include solar, insurance, and AV technology, in addition to a number of other ongoing projects like the robotaxi and humanoid robot. We're going to discuss Tesla today, one of the most intriguing and contentious businesses in the world, as well as Nick Kolis' opinions of the automaker. Without a doubt, Tesla faces a number of difficulties, including unstable markets, supply chain problems, competition, and regulations. Tesla's stock has also experienced extreme fluctuations, drawing both bulls and bears and hitting new highs and lows. Does this, however, accurately represent Tesla's valuation? What is the future of Tesla, and how can we assess the potential and effect of this company? Come along as we examine the remarks made by Wall Street analyst Nick Kolis, who is considered a financial and automotive specialist. Now let's get going. Thus, Tesla and Toyota are the two automakers that are going to be around. It is evident that Tesla is valued at $700 billion, as opposed to $300 billion. This $400 billion extra is the worth of autonomous driving, to put it simply. It acknowledges that Tesla has advanced autonomous car technology tremendously and will do so in the future. The underlying premise is that there may be some call option value. Not necessarily an equity value, but call option value contingent on Tesla emerging as a leading supplier of autonomous car technology. Both of those figures are somewhat mushy, but it's clear that AV technology is worth far more than $400 billion once Tesla gets it operational. However, that's how I view the Tesla valuation. It ultimately boils down to the worth of autonomous car technology and the value of an industry survivor, which we know Tesla will be. It is really volatile right now. As you are undoubtedly aware, the price of call options fluctuates far more than that of equities. This explains why Tesla is so erratic. In many respects, the call options value fluctuates greatly every day due to the whims of the market. However, that is how I see it. We have two buckets: the AV bucket, where Tesla is unquestionably leading, and the survivor bucket, which Tesla will be. The sum of the two determines the company's market value. Co-founder Nick Kolis ran DataTrek Research, a company that gives investors insights based on data. Along with being a former Wall Street analyst who covered the car industry for decades, he was also the chief market strategist at Convergex Group. The automotive specialist has been closely monitoring Tesla and has frequently expressed his opinions on the company's potential, difficulties, and valuation in a variety of media venues. The analyst reaffirmed in his most recent remarks regarding Tesla that the company is a technological company that is appending a number of industries, including software, artificial intelligence, energy, and transportation. Additionally, according to Nick Kolis, Tesla may be worth up to $2 trillion, which would indicate a share price of almost $2,000. However, what are his presumptions and reasoning for arriving at this valuation? Let's investigate. Welcome back to Tesla Tomorrow, everyone. With more than 30 years of expertise in investment banking, money management, and equities analysis, Nick Kolis is a well-known Wall Street analyst. He also frequently appears as a guest on CNBC and Bloomberg, and the financial press frequently quotes him as an authority. Kolis has been outspoken about a number of issues, including Tesla, the electric car manufacturer, upending the auto industry. Kolis has been a longtime follower of Tesla and has seen firsthand the company's amazing development over the last 10 years. In addition, he has witnessed the fluctuations in Tesla's stock price, which are caused by a number of variables, including interest rates, problems with the supply chain, rivalry, laws, and Elon Musk's personal behavior. His recent remarks on Tesla challenge the assertions made by Tesla bears that the company is just like any other automaker, giving investors renewed confidence that their money is being invested wisely. Before we continue, please click the like button, subscribe, and enable post alerts if you enjoy this kind of content, so you can be informed about all things Tesla. Colas discussed his opinions on how to evaluate Tesla and the reasons behind his bullishness in the firm during a recent interview. He clarified that Tesla is a technological business that is upending a number of industries, including energy, software, transportation, and even artificial intelligence. He said that Tesla has enormous potential to increase its sales and profitability in the future, particularly in international markets, and that it has a distinct competitive advantage in terms of its brand. According to Colas, Tesla is not a good fit for standard valuation techniques like discounted cash flow or price-to-earnings ratio, since they fail to fully account for the breadth and effect of the company's business plan. He proposed that a sum-of-the-parts approach, in which each business unit of Tesla is valued independently according to its potential for growth and profitability, would be a more appropriate method of valuing the company. Remarkably, Nick Colas is not the only expert who has this opinion about Tesla's valuation. Additionally, Dan Ives, a Tesla bull, has stated in a number of interviews that the potential of each of Tesla's companies should determine the company's valuation. According to Nick Colas' estimation, Tesla's automotive division alone is worth $1.2 trillion. Its energy, software, and artificial intelligence segments are valued at $400 billion, $300 billion, and $100 billion, respectively. When all were combined, he arrived at a $2 trillion total valuation for Tesla, indicating a $2,000 share price. Is that amount high? Indeed, but it's also conceivable. This is the reason why. In order to fulfill its purpose of speeding global transition to a sustainable future, Tesla aspires to be the best in every statistic. The carmaker intends to keep raising production levels and product availability in order to accomplish this. You may find it interesting to know that Tesla intends to install 1,500 GW of energy storage a year, in addition to reaching its goal of selling 20 million cars. Assume that Tesla sells 15 million vehicles by 2030. If the auto company's non-automotive items can generate just 15% of its car sales income, then its overall revenue may reach $1.04 trillion. This may push Tesla's stock to a maximum price of $6,000 per share by 2030, if not higher. There will undoubtedly be difficulties and roadblocks along the process. As Nick Colas once pointed out, Tesla will have a difficult time persuading American consumers to purchase millions of electric cars in the upcoming years. In addition, he makes the case that US EV adoption is still low when compared to areas like China and Europe, where EV-friendly laws and incentives are in place. He consistently notes that Tesla has certain advantages over its competitors, such as leadership in battery technology, software, and autonomous driving, yet he is still optimistic in spite of everything. Additionally, Nick Colas has voiced his appreciation for Tesla's concept and implementation. He declared that he thought Tesla was among the biggest and most significant businesses in the world. Tesla's performance could be impacted by a number of risks and uncertainties, but its value is still high. Colas goes on to say that Tesla will never stop surprising and delighting its supporters, investors, and customers. How do you feel? Tell us what you think Tesla is worth in the comments section below. Click the next video on your screen to see more updates on Tesla. I'll see you over there.